Mood is very upbeat. It's a lot better now than it was for the past 2 years. In the last year, a lot more players are coming back to the marketplace. A lot of companies have charters that say they have to put X amount of dollars or percentage of their dollars to work in the real estate marketplace, in the arena, and they're not meeting their quotas. And they're being forced to put more money into the marketplace, so more people are looking at deals. The more people that look at deals, the more quotes you get. The more quotes you get, the more deals will actually get financed. The biggest difference from the old days really is that they're taking a much longer look at the borrower than they ever have before. The borrower is more important than the deal. If the borrower passes the smell test, then they'll look at the deal. But the deal itself, leverages are lower because there's a major aversion to risk. I think things that were not mentioned were the effect of the U.S. economy on the housing market, the effect of China buying bonds on the housing market, and the individual state deficits that are going on right now that have a major effect on the current housing market. Unemployment and underemployment were really not discussed, and everybody is saying how they're predicting rate increases and rent increases. And I just don't know how, with so many families underemployed and unemployed, how they expect to be able to collect those rent increases. They also didn't discuss at all what the effect will be when the single-family lenders come back to lending to, potential homeowners again. How many people are currently in rental apartments because they had negative AM loans, and I believe that the negative AM loans were really the root of the meltdown from the start. And when those people get their credit score back up after they've been renting for a couple of years and they can get a loan from the bank without going through a financial colonoscopy, how many people will be moving out of those apartment buildings? And the good news definitely is that rates are low. There's almost no new product hitting the marketplace. And as I said, single-family borrowers can't get money right now to buy a home, which is keeping people in their rentals. They also discussed in limited terms what the potential is for the dreaded double dipper on inflation. Could be coming. We don't really know. It depends what happens with Fannie and Freddie. It depends what happens with the commercial real estate market between now and 2015, 2016, and who's going to be able to pick up all of that debt. It's gotten better for the past 2 years. It continues to get better, and I truly believe that short term we're going to be in a better place. As far as long-term outlook, my crystal ball is cloudy, but there's a whole lot of uncertainty on the horizon, and I just hope and pray that we're going in the right direction and we continue to go in the right direction.